I was working a corporate sales job. I made it to the top of the company, number 8 out of 5,079 over a 4.5-year career. And I did all the right things until I looked at something that was a very important action that I recommend to everybody that's listening to this podcast, which is I looked at my boss's boss. Your worst case scenario is your present day reality. Vision without action is a daydream. Action without vision is a nightmare. And that's why we all work, right? That's why we all move up the corporate ladders, the more money for more freedom. But I realized that I would actually have less time. So after I shadowed him, I planned my grand escape.
This is your real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Brian Luebben. Brian is an entrepreneur, podcaster, real estate investor, originally started in Atlanta. He built first company in college. After graduating, he thrived in sales at a Fortune 500 company. But what I love that he talks about here is that he audited his boss's boss. And not just in the business or what he did on a day-to-day basis, but in other avenues of his life as well. And that was very eye-opening, I think, for Brian. But it's the steps he took next, right, that are going to I speak to you today as a listener, as you are potentially in that corporate position. You're looking for more passive income. You're wanting to learn how to invest in real estate. Brian's story and even his expertise that he brings to the show and to you, the listener today, are going to help you in a ton of ways, in ways you probably don't expect that he's going to bring some value today. That I was very impressed by Brian, his story, his clarity, right, on where he's going, which he's going to help you to gain clarity today as well. Brian, welcome to the show. Honored to have you on. I've been doing some research about you, and I just think your story, the success that you had, the fear that you had to step through to get to where you're at now is going to resonate with our listeners in a big way. So welcome to the show.
Excited to be here, Whitney. If I can do this, anybody can do it. I tell people to talk to me like I'm a fifth grader or a golden retriever. So I'm saying if I can pull this off, anybody can pull it off. And I've accomplished some cool stuff. I live a cool life that a lot of people that are listening to this show want to accomplish, and we'll pour into them over the next 40 minutes or however long we go and make it worth it. Yeah,
that's awesome. No, I'm very grateful for your time and just your willingness to help others to do what you have done. But let's dive in there. Brian, where did you come from corporate wise? And let's talk about that transition a little bit and some of the really the heartaches that people are, it's almost the fear, right? The fear that keeps them from stepping out like you did. And let's go through that with your story.
Sure. Well, I'll start off with like tackling fear head on, because, a lot of people that are listening to this, Whitney told me before, and I've listened to the show as well. I don't think you do enough episodes, man. That 2,000 daily shows, I don't know if that was quite enough. We needed 2 a day. Yeah, so fear is an interesting subject to tackle real quick out the gate, because we can nip this in the bud for what it is right now. Everybody says they have analysis paralysis, which is why they don't invest as an LP, as a GP, and buy the assets, invest with others for the assets. And it's not a fear of failure. I truly don't believe that. I think it's a fear of the appearance of failure. You're caring about what you're going to look like to other people. And so that was what I was suffering from when I was in my job. I was working a corporate sales job, B2B, business to business sales rep. I made it to the top of the company, number 8 out of 5,079 over a 4.5-year career. And I did all the right things. I crossed all the T's, I dotted all the I's. And I was the wonder kid. I was going to be the very obvious next choice for management, then vice president, SVP, up the chain, until I looked at something that was a very important action that I recommend to everybody that's listening to this podcast, which is I looked at my boss's boss. Was a projection of who I would be at the peak performance level of that company, of that position. And so in 5 years, if I bust a tail, that would be me. And I did an audit of my boss's boss. And I looked at his life. I looked at his relationships. I looked at his health. I looked at the position. And although I was making good money, about $250,000 a year, he was maybe making $350,000. Very good salary, very good pay. But when I looked at his calendar, he was booked in 15-minute increments, Zoom calls back to back to back to back. And he wasn't seeing his daughters grow up, young daughters. He wasn't healthy. He was eating donuts and caffeine and Red Bull to stay awake and stay alive for all these conference calls. And I realized oh my gosh, if I work harder here, then I will not be able to have my freedom that I want. And that's why we all work, right? That's why we all move up the corporate ladders, the more money for more freedom. But I realized that I would actually have less time and less PTO and less ability to travel while I was doing that. So after I shadowed him, I planned my grand escape, began investing in real estate over a couple of year process, started up my own podcast, The Action Academy, for the one simple reason, and that is I wanted to see how the financially free freaking did it. And the best way to do it is to ask them. Pretty simple, right? And so I started up my daily show back in 2021 now. So we're going on 3 years now, and created the business from that through my cash flow in real estate. And through that business, I was able to replace $20,000 a month back in 2022. And I was able to leave that job. So going back to fear, to tie all this together and to land the plane, when I left that job, I had 6 months of cash of living expenses saved up in an emergency fund. I had about $10,000 to $12,000 coming in a month from my podcast business, $4,000 a month coming in from my real estate purely passively. I did the co-living strategy, which we can get into. And so I did everything right on paper, but that fear of failure is still what kept me there. And there's so many different things that we're going to talk about in this podcast, but that was the main thing, that even after I left the job, I was having panic attack after panic attack, almost going to the hospital after I left the job and did what everyone's trying to do. And the one piece of advice that got me out of there was my mentor at the time saying, Brian, say you go invest in the real estate, say you go start your business or buy businesses, which we love talking about, and it does not work out. Everything goes wrong. What would happen next? So the opposite of what you think a mentor should be telling you on the phone call, having a panic attack, right? And I said, well, Mike, I think I'd go get another job. And he goes, got it. Your worst case scenario is your present day reality. And then that's what gave me the courage to push through, to start up my company. Fast forward, I went and traveled full time around the world for 8 months. I lived in the Greek islands. I lived in Barcelona and Spain and Europe and Brazil and Colombia and Latin America. I traveled all around the world at 27 years old. I did what most people are dreaming of doing today. And now since that point, I make like 5 times more money. We do 1.4 million a year from our company today that I can operate anywhere in the world. And now I'm selling my real estate, my single family, to buy boutique hotels. And that's where we're at today. So I'll end my tangent at that point, and we'll take it in any direction you want.
No, this is really good. I love that you step back, and I love the idea of auditing, your boss's boss, of where you could see yourself, like that's where you would end up, like in success, right? In that position, that's where you were going to be. I love the audit thinking, and that you didn't just look at his income, right, and think, okay,
No.
this is where I want to be. But you saw him as a father. I love that you mentioned that, right? In his calendar, you're thinking, man, 15-minute increments, is that really what I am living for? And I want to jump in to a few other things there, but you planned your escape. Fear was a massive thing you had to overcome. I know when I finally left, I was a federal agent. And so, to everyone around me at the time, that seemed very successful. It also seemed very secure, right? That, to everybody that was in my circle at the time, for me to say, hey, I'm planning my escape, like you said, it just seemed so crazy, right? Like, have you lost your mind? This is so secure. There's good retirement, right? There's all these things, And I'm just like, well, I've just maxed it out in just a few years, and I can't. And I also did what like the next position, or even the position above that, doesn't gain me enough to make it worth it. I'm like, yeah, there's got to be something else. So I love that you called it even an audit, of this position and this person that you could physically see in that space. But you did have to conquer the fear. And I think somebody asked me a similar question, but ultimately it's like, if the worst case happens, where are you going to be? Like, even if you lost your home, you probably know somebody that you could go live with for a while, right? Or family member. So even in the U.S., we just have resources like that even the worst case scenario, it's not going to be just too horrible most of the time.
We succumb to binary thinking. And and for people that are listening, and yes, this is a real estate show, we're going to talk about numbers and tactics, but I'm here to tell you guys something that is going to absolutely blow your mind. I hope you're sitting down. And that is, Whitney, how many people have invested in multifamily real estate before.
How many people? Oh my goodness. Yeah. Hundreds of thousands. Yeah.
Hundreds of thousands, millions of people. So millions of people, and this is a wake-up call that a lot of you guys that are listening to this need to hear it. I needed to hear it too. Millions of people have already accomplished what you're trying to accomplish. You are solving the wrong problem. You're asking how. Like, that is not the question to ask. The question is where. The question is why. The question is who. Because everything that you guys are looking to do has already been documented on YouTube. Whitney's already talked about it in 30,000 different languages on this podcast. I have covered it as well. There's only a few key core metrics that you need to track when it comes to commercial real estate. You need to know how many deals are coming across your desk, how many deals are you underwriting, how many offers are you submitting across all asset classes. So really, the reason that you aren't taking action is a lack of clarity. And so I like to talk about clarity because when it comes, like, that's what we do in our day job now is we help people that want to replace $10,000 to $30,000 a month in passive income within 2 years. And I say 2 years because I tell them if you want to get rich quick, which that is still very, very quick.
That is quick.
We're not your people. Yeah. So that's why we sprinkle business acquisition in there to help make up the delta. But when it comes to clarity, the reason that I was able to run the audit and have context to run the audit on my VP, and this is, again, nothing against him as a man. Like,
Sure.
I'm sure like when he went home and put his head on the pillow at night, he was a perfectly lovely man, and he never did anything wrong to me. It was just the position that I'm talking about. But I have a crystal clear vision of the life that I wanted to live and the person that I wanted to be. And because I had that juxtaposition, I knew that there was a discrepancy between where I wanted to be and where I was headed. And a lot of people have never done that. And I call it the entrepreneurial car dealership, where all people are doing is they're going online on Google and they're going to dealership after dealership and they're trying to pick their vehicle. And that's where they spend 80% of their effort, 90% of their time is picking out which vehicle do I want? Do I want the Ferraris, the fast cash, the short-term rentals, the small business acquisition? Do I want something that's more equity, more safety, the minivans for the family? And they're trying to pick which vehicle they want to invest in. Triple net lease industrial. Do you want to do self-storage, multifamily? And they spent years picking their vehicle. And then finally they decide, they pull out on the highway, they start driving down this infinite road, only to realize, whether it's 6 months, 6 years, or 6 decades later, that they never set a destination. And maybe the worst part is they were successful along the way. And they got up to 60 doors, 600 doors, 6,000 doors. And all they could think about was more. And they never pulled over to the side of the road to take a pit stop, to set the GPS. And all of a sudden they look behind them and their family's not in the car anymore.
Yeah.
And I know, unfortunately, many people that have succumbed to this. And that's what clarity solves.
I love the thought behind clarity. And I will also, I mention often that we spend so much time and resources doing strategic planning for our business and thinking in so much detail, right? Where we're going, the team members we need, even as we grow, who's our next hires, all these things, right? But how often do we do that for our family or our business or just personally? Not our business, but I mean, we do it for the business, but what about our family? What about us personally? I love the clarity statement that you gained clarity by doing this audit and really figuring out, hey, where you wanted to go. Like, what is your mission? What's your why? What spurred you really in this way? Because I think there's often something deeper that's like pushing you to think bigger or to feel like, okay, this is not what I want for me, my family, whatever it may be. What was that for you?
Sure. So it changes with seasons and it changes with context. Just like people picking out which asset to choose. I tell them it's like going to a food court at a mall. So you're going to a food court, you're trying out the free samples, you're seeing what you like the most because now you have context after going around the court. And now you can sit down and have a full meal somewhere. So it's the same thing that I recommend because we teach people about self-storage, mobile home parks, multifamily, like small business acquisition. So like, which one do I pick? And I'm like, go buy a 10 unit, buy a self-storage facility, buy a laundromat, see what you like the most, then dive down on that asset. So decision-making and strategy comes from context. Strategy is a set of self-imposed constraints placed upon decision-making. So it's what you say no to. And in the very beginning, I didn't have context. So in the beginning, it was just, I know that I want to travel around the world. And I want to be able to operate my business anywhere with a Mac, a mic, and a Wi-Fi connection. That is all I knew in the beginning, and that's okay. Financial freedom is the first level of freedom for that reason. because although financially I had the revenue coming in for me to just go live in Greece, the Greek islands for a month, I didn't have the other freedoms because, well, I technically did, but I didn't have the context. So first it's financial freedom, then it's time freedom, and then it's mental and emotional freedom. So financial freedom is you have your $10,000, your $20,000 a month coming in. Time freedom is now you have control of your calendar, and mental emotional freedom is now you have control of your thoughts. And so that's where I was. And I was walking along after about 5 months deep of this sabbatical, called the radical sabbatical. And as I was doing it, I just realized that I was good and I was comfortable. And therefore, I had no desire to keep going. But I was young, I was 27 at the time, and I was just like, there has to be more. There has to be some new form of like encouragement, of spark, of fire, because a lot of people that are listening to this, Whitney, the reason that they aren't doing the thing is because they're very comfortable with where they're at. They make great money, especially if they're in a position to be a limited partner, an LP investor, and maybe they make 200,000, 300, 400,000, and they're financially covered. That was me. But then I made the pivot from me to we. And that's when everything changed. So a lot of people can do that through their family. I had to be proactive about it because I don't have a family yet. So for me, I was just like, how do I help as many other people do what I did? And it started at a small scale, and then it grew and it grew and it grew. And it goes back to the Zig Ziglar quote, which is the best way to get anything you want out of life is helping enough other people get what they want. And so we started up our business by doing 100 free consult calls. And now that is our business. Our why is helping 1 million people replace corporate with cash flow, because I feel that a lot of people were like me, where they made that realization that what they were doing in that corporate job wasn't their highest and best use. So now we use these different frameworks and these different methods to help people start with clarity first, cash flow second, then we get them scaled and then get them into the community. So it's a process that we follow, and it works very well. So to answer your question, to land the plane, in the beginning, the money gets you out, but then you have to actually think about, what is your purpose? What are you here to do? What kind of impact are you here to provide? And then that's what yields the next thing, which is what I call passionate income, which is what could you get paid to do that you would happily do for free?
Love that. I love the plan, and even starting with clarity, right, and where you're going. What does that look like for you? Say, where's Brian 10 years from now?
So right now we have the podcast. I've got it all kind of written out in a mind map. So I look for models to follow. So I follow Walt Disney's model, and I've got this giant framed picture in my office of the Walt Disney mind map he did in 1957. And he started with his creative studio, and then you see it branching out, and he has like television, theater, movies, Disneyland, merchandise, sales, IP, and it has all these intersections and lines crisscrossing between them. And that's what I do now with my businesses. So right now, over the next 3 years, I can answer that question. We have our community, which is, for sophisticated investors, most of our people have between 5 to 50 doors that are in there, and they're looking to scale faster. So the community is the main vehicle. That's the core business. Then we have our events company, which is international events that we're throwing for the community for high-level real estate investors. That's almost at a 7-figure mark for that business. Then we're going to go into boutique hotel and hospitality acquisition. That's what we're gearing up for here in 2025. So because of the events business, we realized that we wanted to own the places that we were staying in when we went to Cabo and Mexico and Tulum and all these different wonderful places. So then that is going to be the new benchmark. We're trying to target about $25 million acquisition there. And then it goes over to our business acquisition arm, which is going to be the funds that we're raising through Action Academy. That's going to be our business and real estate fund. And we're going to do that internally through our community, and then hire operators within our community as well. So it's built by Action Academy for Action Academy is kind of the idea behind it.
Love it. I love the clarity. I love the detailed thought, right, that you've definitely put into that to be able to just know that like that, right? I love that you've gained clarity on that. And most people you ask, right, and it's like you said earlier, they don't have clarity. They have no clue. They've not pulled the car over, like you said, and actually thought about where they're going personally in their lives. And you've obviously done that. Speak to your your real estate investing. We talked about you did the audit, of your boss's boss, and you developed a game plan, of how you were going to exit, right? What was your plan to get out to gain the passive income? What were some of your first real estate investing or investments that you made, and then how's that grown?
Yeah, so I did it the most boring way possible that anybody can do, and they'll be irritated to learn that.
Which is good.
Yeah, so I would just simply, in the beginning, I would buy a house a year. I'd live in one room and I would rent the other rooms out. That's what I would just do. Once a year, get a new loan. I was like, let's go, baby. Let's get another house. Let's get another house. And I did that every year. And that's what got the first cash flow up. And to their credit, like, the properties cash flowed wonderfully. I did the co-living strategy. So I lived in one part and rented all the other bedrooms out. And so I'd buy 5-bed, 4-bath houses, 1970s, split level construction with 2 kitchens in North Atlanta. That's what I focused on as my niche while I was doing it. And it worked wonderfully well. I had the $4,000 a month of passive income, which was important for me. And it's a good point to make on the show for people. The cash flow that you think you need is normally different than the cash flow that you actually need. And so that's a huge thing, because a lot of people, especially as passive investors with you and like LifeBridge Capital, people think that, if I make $10,000 a month is what's thrown around a lot, right? But there's actually 3 levels of cash flow that we've identified. And when you break it down and chunk it down, it makes life and it makes investing much more simple, and it makes things less scary. So I call it survive, arrive, and thrive. Survive is how much cash flow do you need to cover your fixed expenses. Your mortgage is paid, your bills are paid, your kids are fed, everything is covered. Like, you have a roof over your head, the power is turned on. Arrive is now you have more of a normal existence again. You have discretionary income. So your wife is ordering Amazon packages again at the doorstep if you never stopped her in the first place. And you guys are going out to eat a couple of times a month. That is back to discretionary. And then thrive is your income is completely replaced. So for me, at $20,000 a month, it was a terrifying idea to replace $20,000. And that's what keeps a lot of people, especially high performers, high earners, from even getting started, is because they can't fathom chunking that down, because that's a lot of real estate that you need to acquire. And so when I chunked it down, I realized my fixed expenses were only the $4,000. So my survive number was $4,000, my arrive was $6,500, and my thrive was $20,000. So what we've seen, because now we professionally help people leave their jobs, like that is what we do over hundreds of times now, is a lot of the times people will leave before they full on replace their income, now that they have like a fully functional business, and now they can go all in into scaling that thing. So if you can knock out your survive number through that passive income, what I recommend doing next is focusing purely passively on survive, cover your fixed expenses. Then I recommend highly putting all of your discretionary cash flow, income, savings into investing in people, into investing into communities, into mentorships, into masterminds, into workshops. Heavily recommend that. I have done it myself. Put my money where my mouth is. Gino Barbero is a personal friend of mine from Jake and Gino, who's big in the multifamily space as well. And he has a wonderful quote called the 2 ways to get mentorship, which is pay to play or seek to serve. So seeking to serve is exactly what you imagine. In the beginning, I didn't know anything about multifamily, so I helped multifamily investors in the Atlanta market junk out their units. I would go and I'd be like, yeah, I'll do it for free labor. I'll take everything you hate and I'll put it out and trash these units out for you. And then they would mentor me in return. That's seeking to serve. Pay to play is now when your time is more valuable. Today, I'll spend $5,000, $10,000, up to $50,000 for mentorship. And these people will show you the model and the playbook to take you where you want to go. So that's step 2. Step 3 is now you're going to go and you're going to form partnerships with these people. And this is the equivalent of taking the freaking elevator up the skyscraper instead of the stairs. Because now you're able to borrow experience when you're talking to your brokers. You're able to borrow expertise. You're able to borrow the mindset, most importantly, that they have. And then step 4 is now you're acquiring assets and you're scaling. So that is what I did. So I started off with that 4,000, and then I started pairing and partnering up with people. I have since sold all of the properties that I had, ironically, because I looked at what a metric that nobody talks about, which is ROE. Return on energy, return on effort, And after a few evictions in the single family space, I was good. I'm like, this is no longer worth it. So I pocketed a couple $100,000 in cash. I did not 1031 exchange, which isn't tax advice. But for me personally, it wasn't the best use case for me to have that time stamp. What is it? Is it the 90 days? Remind me. I believe there's the time frame from when you close on the property and then you have to select the next property for the
Oh, yeah,
1031.
yeah. For 1031. That's right. Yeah.
So that was like, okay, this is more stressful for me to identify the next property, and this would force a bad decision because I have this time frame. So I decided I wrote off a lot of depreciation from my business, and I was able to mitigate those taxes down to about 10%. So I've got hundreds of thousands of dollars sitting in cash, and now we are finally doing exactly what I just said. I've built the relationships now in the boutique hotel space and the hospitality space. I'm going to be partnering up with people, and then that's what we're aiming for the next acquisition. So right now I am sitting on a lot of cash, and I'm doing the Warren Buffett thing, being patient and establishing my buy box.
Love it. I love the survive, arrive, thrive thinking as well. What about those who want to build the survive money, but they can't go co-live or house hack, right? Maybe they already have a family, that type of thing. Any suggestions around building that survive money? Where to invest?
Yeah, absolutely. So if I were to go back, I wouldn't even do what I did. Like I would simply like take the elevator to the end of the process. So we have a lot of folks in our community, and you know people as well, where you don't need money, like your own money, your own capital to buy commercial deals. So a lot of the times what I tell people is, and it's the same thing that Brandon Turner and Bigger Pockets crowd has preached over and over again. There's the deal triangle. You need three things. You need money, knowledge, or hustle. If you don't have the money and you don't have the knowledge, the hustle is what you have, and you have to use it. So go find the deals. If I were to start back in that same position and I was in that corporate job, I would get lethal at two skills: talking to sellers, talking to brokers, and underwriting property. That's what I would do. And I would be absolutely lethal at getting deals under contract, building up an acquisition machine for myself. And then I would be building in a networking metric as well, to where, like we talked to our people today, and it's like, if you can identify 10 new people out of your phone or through your adjacent connections that could be potential capital partners, and say something along the lines of, hey, I don't know if you've noticed or if you've seen, but I'm beginning to invest in real estate. I'm partnering up with these people that have a lot of experience in it. I'm not going to be doing it by myself. And there will come a day where I'm going to be looking for passive investors. If that's the case, do you know anybody that would happen to be interested in that? And that's the magic line. You're not asking them for money. You're asking them if they would know anybody that would be interested. And it works for me 10 times out of 10, because it's a subliminal like sales trick, because now they're like, wait a second, I'm interested. I qualify. I'll give you money. And so building up your network, building up your database, getting these under contract. And then when the time comes where you close the asset, then you're able to partner and then get a percentage of that equity for being the operating partner. So that's what I would do if I was starting from scratch. Now, of course, like you talk about on the show, you could also be an LP and purely passively invest, where you'll get your 8 to 10% pref, which is also amazing. It just depends on the speed within which you want to build cash flow. That is it. And that comes back to clarity.
I love that. It goes back to the clarity and the speed you want to build the cash flow. And we all want it now, right?
And your risk tolerance as well. Yeah. So it's just knowing the game that you play. And that is everything. Because for me, I'm an LP in a couple of deals, but for me, that doesn't wet my whistle anymore. Like I'm either going to be GP or I'm going to be co-GP on anything that we do, or I'm going to do a JV agreement and take it down with some of my own cash, a big chunk, and maybe 2 or 3 other partners that are selected. So that's what we're focusing on right now. And that's the advice that we give. We have a lot of people that have bought a lot of commercial real estate with none of their own money. And they've either raised capital or they've been equity partners through managing the property and finding the property. So that is a huge thing that people do that we've seen.
What are some of the common things you've seen across your most successful people in the academy, right? Who have grown faster or have stepped past the fear the fastest and, are seeing that success faster?
Easy. They listen. So the acquisition, we tell everybody the same thing, and feel free to chime in and add anything. You have a larger portfolio than I do. So tell me if any of this is off base or if you would add any color to it. But how I've seen things over hundreds of transactions now is The acquisition process, you need to completely remove your emotions from. There should be zero emotional attachment. Don't love something that doesn't love you back. That applies to your job, that applies to your real estate, that applies to your spouse, possibly. Hopefully not. So when it comes to the acquisition, it's just focusing on those key metrics. Like your entire machine revolves around how many deals are you getting across your desk? What does your lead flow look like? How many deals are you fully underwriting and analyzing? And how many offers are you submitting? So the people that thrive in our community the most are the ones that blindly just listen to the freaking playbook that we've got, because we have operators in the 8-figure space on every single one of these assets. And this is what we've distilled it down to. Let's make it as simple as possible. Fancy fails, simple scales. So tracking those 3 metrics until you finally, oh my God, get a deal under contract. You get an LOI accepted. Now that moves a bit into the more emotional side. So now everything that can go wrong will go wrong. Murphy's Law. Show me a deal that everything goes exactly how you think it's supposed to go, and I'll show you something that's going to cause me even more anxiety, because I'm due. Because at that point, there's always something. There's always back taxes, some type of lien, some type of something, water damage somewhere in one of the units. And so what we've seen is the people that crush it the most are lethal with tracking their metrics when it comes to lead flow, deals underwritten, offers submitted, with a hyper focus on how many LOIs are being submitted weekly. And they are hyper focused on the 1 to 3 mentors that they have in that space to call when it's diligence time. So I say that the acquisition process is more numerical. But when it comes to diligence, that's when you really need to borrow the experience of somebody that's done it before you. And that's really seen how things go left, right, and sideways over and over again. So that's how we've built up our system. And then that's what's helped us successfully get to the closing table.
Love that. And that you're being very purposeful about who you're surrounding yourself with, right? Those mentors. Any tips on how you selected those? So, I mean, I've hired a number of mentors for different things in my life, different parts of my life that I want to be successful in, right? Or paid lots of money to be a part of different masterminds, but ultimately for the network, right? To be a part of groups that are other people that are out there doing it or that are way ahead of me. Ultimately, how have you done that? Well,
sure. So you want me to start with personally or for our people?
Yeah, for you personally.
For me personally, it starts with hyper clarity about what are my parameters for a mentor. And so this is really helpful for people that are listening. So everyone starts with, oh, I want somebody that's in multifamily, or I want someone that's in self-storage, right? And then you narrow it down a little bit to where it's like, I want somebody that's in self-storage in the DFW market, the Dallas Fort Worth, or the Austin market, or the Atlanta market, or the Sun Belt, wherever. And then you just keep narrowing it down. I narrow down my mentors also by lifestyle and personality traits. So how is your life? Like, are you fit? Do you still go to the gym? How is your balance of schedule? Because I know a lot of people that make a lot more passive income. Like right now, our cash flow from our businesses is about $120,000 a month, which is fun. That's gross, not net, but we net about probably 60 to 70,000. So that's super fun. Do they have the time freedom? Maybe they make $200,000 passively a month, but can they just take off on a Tuesday and go with their kids, to the lake or something like that? I look for that. I look for their health. I look for their relationships, because I don't want to take advice from somebody that doesn't have a wealth in all areas of life. And I've done that before, and it led me down a path where it was just like hyper acquisition, burn the boats everywhere else. And there's this wonderful quote that I'll say in closing there, which is Jay Papasan's now a personal friend of mine over here in Austin, Texas. He wrote a wonderful book called The One Thing with Gary Keller. And they talk about this juggling act of life. And life is all these different balls that you've got in the air 24/7. Some of these balls are made of rubber, some are made of glass. The balls that are made of rubber, if you drop them, they will bounce back and they will get back into your hands. But the ones that are glass, if you drop them, they will at worst case shatter, at best case be fractured. And the majority of balls that we juggle in life are your friends, your faith, your integrity, your relationships, your health. And then finally, the last ball is your work. And we focus so much not on dropping this ball of work, but that's the only rubber ball. The rest are made of glass. If you drop your friends, you may not get that back, that ball. If you drop your health, you may not get that back. If you drop your integrity of your faith, may not get those back. So I look for somebody that juggles very well when I look for a mentor.
It's the audit, right? The audit that you did of your boss, and you're doing that of these potential mentors as well. And I really appreciate the focus that you have on all these different areas, right? And I call it building true wealth, right? It's having this purpose that's bigger than just your financial success, but it includes your faith and your family and who you are. It's, man, your health. I love that.
And the guy that I learned from, he tracks his ski days. So he skis 112 days a year. He tracks his ski days. Or he's like, I'll go anywhere that I can to go ski. He says he goes and gets the goods. So I was just awesome. Like, all right, that's my kind of guy. I'm like, all right. Like, tell me how you run your business, because that's a person that knows how to delegate and elevate.
Dan Sullivan I've heard him mention, double your time off, double your income.
Yep. I'm working on that. I'm guilty.
That's right.
I'm very guilty of that.
So what's a challenge for you right now? What's your biggest challenge?
Scale, hiring, management, leadership, 0 to 1 million. So I'll talk about the context of business, of just like regular business. And this also applies to like real estate businesses in general, because all paths lead to like business ownership. Like you can be, and this is from the context of me interviewing like about 600 multimillionaires and a couple billionaires now. And the normal person on my show is between 5 to 50 million net worth, up to a couple billionaires, like I said. And I've noticed that you can invest your way to 7 figures, but you have to build a business to get to 8 figures and beyond. Like, even if it's an investing business, like a multifamily business, like you have LifeBridge Capital or something like that, like you're a business owner. So 0 to 1 million is product market fit. 1 to 3 is doing more of what scales, like what you're already works and you're doing it at scale. 3 to 10 is now you're hiring other people that are more expensive that have already been at the 10 million. So like that is what we're currently focusing on. We're on the hunt from 1 to 3. So it's doing more of what works and what scales. And now it's building SOPs and hiring and working through others. So in the beginning, when you have a smaller team, it's easier. But now we're growing up to, now we've got 6, and now we're going to be growing up to 10 here soon and going up to 15 and 20. It's like, if I've never managed people before. So it's a new skill that I have to give myself grace with, that I don't just but I read the management books, Whitney. I read the books. Like I did.
You got all
Article
of it then.
7.
You know what to do. Yeah.
Yeah. I read all of Dan Sullivan's books. I read page 7, paragraph 4, and that didn't work in real life how I wanted it to. It's just reps. So people wait for the confidence to take action, but it's the taking of the action that builds the confidence. And so right now I'm just getting reps in as being like a business owner and a manager of people. That's what's challenging for me right now, is having different personalities, different ways of doing things and viewing things. Hyper analytical people on my team and acquisition think about things completely differently with a risk tolerance than I do. And I have to talk to them completely differently. Having an integrator and a visionary integrator relationship like Gino Wickman, Rocket Fuel, that is a lot different. So in the beginning, it's a you thing, when you're investing and you're building things up. But you get to a point where now it's just like, now everything I do is focused on other people and how do I build a vision big enough to fit their worlds within. So I'm really, really good at that. But now it's just like the execution part. So it's just growing pains right now, but it's fun, and I live document it on our podcast, because the entire show is like, watch me go from 0 to $10 million a year from scratch while I travel full-time around the world. And so we document all of this live. So I'm glad you asked that, because it's very, very top of mind.
Yeah, that's awesome. I love that. Are you following Gino Wickman's Traction? I see Traction behind you. Y'all implement EOS?
Yeah, I'm obsessed with Gino. I'm obsessed with Traction. He's coming on our podcast here soon, so it's been a haul to get him on. But yeah, I'm obsessed with operating systems and stuff like that. Like that's what we're learning right now, and that's the best people that I've seen in this space. Are people that are great asset managers. So right now, over this last year, we've seen a lot of in 2023, we had a lot of people that joined our community, and they're looking, of course, to buy commercial real estate. And it's been a really tough market to buy commercial real estate in. People have had a really rough time finding storage deals. Multifamily is going through the freaking ringer right now because of the cap rates and the interest rates. And so now this year, we are seeing way more traction because we have 300 people that are actively doing this. We're seeing way more traction because now the sellers before that were trying to like list at 3 year ago prices, like they're finally coming to Jesus now and they're realizing that that doesn't work. So they have to bring it back to reality. And so the conversations are going a bit better that we were having 6 months ago today. So there's more traction today, but it's been a frothy market to say the least. But now the distress is starting to pick up, and we're finding a lot more deals than we did before. So and the underwriting is, of course, like very, very aggressive and very, very aggressive on the conservative side. Like we're underwriting like 10-year notes, 10-year payments, a lot like that. And I don't know if you guys are as well, but I think right now is a rough time to be owning, especially on bridge debt, but it's a wonderful time to get it into the game. I don't know if you would agree with that or if there's any other opinions you would add.
Yeah, everybody's kicking themselves right now that bought floating rate debt over the last couple of years, right? Or last 2 to 3 years.
All of your favorite influencers too.
I mean, they're really hurting right now, unfortunately, because of that. However, it builds a lot of fear in the market with investors, right? Unfortunately, because it is going to be a good time to buy, most likely, soon too. So yes, fixed rate, long-term debt. That's what we're looking for.
A strategy that we've been using and that a lot of my personal colleagues have been using is they are getting really, really close with these bridge lenders, and they are, really in their ears saying, look, you don't want to go to foreclosure. You don't want that on your books. I am here and I'm capitalized and I'm ready to take anything that comes up. So that's a strategy that's producing a lot of deal flow right now, is people talking and building relationships with as many of these lenders and as many of these firms as possible that don't want foreclosures and bankruptcies on their balance sheets. They don't want to be the one to say, hey, like this is the loan that we gave them and now they're defaulting. They want it transferred to somebody. So that's happening a lot behind the scenes. And you're seeing it, and then you see the headlines 6 months later where it's just like, this asset went for this, especially in retail. I'm not touching retail. Retail is still scary to me. I don't know what I don't know there. So we're not even talking about it. I don't know about y'all, man, but like, no, I'm not touching that candle, dude.
Yeah.
There will be other people that make billions of dollars from retail. Not us.
What about, given what you're, talking about the economy and interest rates, those things, what do you expect to happen just in the market over the next 6, 12, 18 months? And what is that causing you to do that we haven't talked about? Buying, selling, those things.
Right now, I'll give you the God's honest answer. I default to my much smarter friends on that. That's where I go to my cats that are 50 to 100 million net worth plus, and I just ask them like, what are you doing and what do you see, because they have the relationships, and that's just the God's honest truth. What I'm doing personally is I'm keeping my head down. I'm stacking cash. I have cash. I'm gonna have more cash. I am building up a war chest of investors with cash, so that I'm going to be overly capitalized, overly qualified for anything that we want to do. And then we're going to keep the reps up like normal. If anything, more acquisition, like more outreach, more broker relationships, more deal flow, get as many deals as we can across the desk, underwrite them safely, very aggressively on the conservative side, and say, okay, cool. Like what does this look like if interest rates go up another point? What does this look like if they stay where they're at? If they go up 2 points, like how many basis points can we manage here? And how do we want to do our capital stacks? Like, how do we want to have this with our investors? Let's be as conservative as possible, which is good right now. So like that is what we're focused on today. Still buying the same assets, still looking for the same deals right now. Personally, I'm looking for the luxury market in hospitality and boutique hotels, and I'm looking at international real estate, so it's a little bit different. So there's some domestic, some international. We'll see whatever it shakes out to, but at the end of the day, the power goes to the person with the most capital and the most deal flow. So that is what I intend to be, is in that camp. I'm also open to business acquisition. That's something that we're eyeballing. I've got some LOIs I've been sending out. One of them is probably going to be accepted on a $1.2 million business that we may be buying 10% down. So that's another thing that we're doing.
That's awesome. What's your best source for meeting new investors right now?
My answer is not going to be applicable for other people's answers, because you know what my answer is going to be. I'm the flame that the moth is drawn to right now because of the podcast. So now after 3 years of podcasting, like it's very easy for me to get in touch with whoever is the top of the space of anything. They'll come on the show because of the names that have been on in the social media following that I've grown now. They'll come on the podcast and they'll have a conversation. So that is very simple. And then also, there's this wonderful quote, which is the longer that you can delay your ask, the bigger your ask can be. And so I've been doing this and running my show and running this group for years now, and I've never not done anything big. I've never done a big raise. I've never done anything. I keep delaying it because I built my own business. I bootstrapped everything. I don't need any outside capital. I knew that one day would come when it's time to go huge. And then at that point, that's when I'm going to tap into my resources. So it's a lot of digging the well before you're thirsty. I've been digging for years. And whenever I pull the trigger, like everyone will know about it. And it'll be something that's very cool. So a good example of that would be like our friend, like Brandon Turner, like how he just came out of nowhere. Now he's got 1 billion assets under management, so I'm just like, that's going to be the kind of thing that I'm aiming for, is something like that, building like an open door capital. That will be when I'm like crystal clear on what that looks like. But that's next year. Right now is all about building our cash flow defense for our business today, our community, because that cash flow is truly defense. I don't need cash flow from our assets because I have so much from our community that I can use that as the defensive metric within which to make safer decisions when it comes to our properties. I can give more to investors. I can give just more distributions and stuff that somebody can't do that is reliant on the cash flow from the asset. I'm not going to be investing for cash flow. I'm going to be investing for equity. So that is my answer. The answer that I would give to somebody that is doing this, from scratch is, I would say, getting insanely clear about what your parameters are, what your buy box is, what your criteria is, finding the 5 to 10 people that are crushing your local market that are doing that thing, and being obsessive about being in their world. Do not stop until you're in their world. Find some way to provide value, comment on their stuff, engage with their posts. They're probably active in your local real estate Facebook community or group, or your local real estate RIA meetup. Be there, serve them, figure out what their problems are, solve them proactively. Be like inexpensible to them. Like, you need to be in their world. That's what I would do.
Brian, what are some of the most important metrics that you've tracked or that you track now? And we talk about that. We talked about it on a business front, the deals that you're underwriting, the acquisition numbers, those things, and offers. But what about even on a personal level as well? Are there metrics that that have proven that, hey, I know if I track these things personally, I'm successful?
Okay. So core business or like just personal life?
Whatever's most important to you as far as what you track.
Oh, that's a trick question. They're equally important to me, ironically. If I had 3 young kids, then it'd be a little bit different, right? But I'm actually investing today. That's the reason that I invest, is for when I do have children. Like, I'm building the foundation today so that when I do have my kids in the future and I meet the woman I'm supposed to marry and settle down, like, we'll have such an freaking cash flow cushion and equity cushion that we can build like a really, really cool life, and I can be super present. Today, it's very funny, and I actually have hyper clarity on this, of course, as well. For me, it's very important for me to be lean by this summer. So my metrics that I track today are a health metric. It's aggressive, but I do 500 calories of cardio. I track by calories, not by like minutes. So sometimes it's that higher state, or maybe sometimes it's a steady state on the treadmill. 500 calories of cardio per day. So I'm doing that. I'm about to go do that right after this. Gym every single day. So I can have a 6-pack by the summer when I'm going to Europe for a month and a half again. So that's a metric that I'm tracking. I do 4 hours of Spanish lessons a week. So
Wow.
I want to be conversationally fluent in Spanish by the end of this year. And to tie that to my business goals, which I realized it's difficult for me because I'm so obsessive about my business to pursue personal goals that don't tie into the business. And that's a flaw that I'm working on, but right now it serves me. So I'm going to continue while it serves me. But so what I do is I try to tie my personal goals into my business goals, or vice versa. So the Spanish thing, that's why I want to buy a hotel or two in Belize or Mexico or Colombia, so that I can use that Spanish to be able to communicate down there. And also with any contractors, any construction that we're doing. And that's why I'm also looking at buying a personal residence down in Tulum so I can go move down there as well. And I'm establishing relationships there. So 4 hours of Spanish per week. And then another huge metric that I do is I guest on 3 podcasts per week, which is a lot. I do 6 hours of podcasting a week. I do 3 guest interviews for my show, and I guest on 3 shows because I know from our data and our metrics that our number one source of lead flow for our business is me going on this show, somebody listening to what I have to say. They enjoy it. They listen to our show. It speaks to them directly. Then after about an aggregate of 3 to 4 episodes, they book a call and try to learn about the community. So going on 3 shows a week is the podcast metric and the core business metric that we track. And besides all of that, like managing the team, building out the acquisitions team, that's what we focus on right now. Some of my personal goals, I want to make 5 millionaires from my community through my next real estate venture. So that's how I think about things is like, I'm good. I'm fine. Like it doesn't really wet my whistle anymore to make more money or do any of this stuff. So now the way that I win the game is by building something that's so big that I make other people really, really rich. And so it's way more fun for me. And I learned that from Ben Kenny, who was the right hand in Keller Williams. Now he runs a couple $100 million companies. And he says, you make $1 million, it's level 1, you make $1 million a year, gross $1 million. Then it's net $1 million. Then it's pay your top 5 people $1 million. And then it's give away $1 million comfortably, personally, per year. And so like, that is his excuse. Like that's the game that he plays to keep him growing his businesses and not getting complacent. So right now it's like we grossed $1 million this year. We'll net $1 million. The following year, 2025, I want to figure out how to make 5 millionaires from whatever we do. So it has to be big enough to where they have a large enough equity portion or a large enough stake in whatever business that we buy for them to have that equity position over time. And then, so that's what we're focusing on right now is that. So that's a blast, building out org charts, stuff for them. So that's what we're doing
Love
right
the
now.
focus on your team and even their growth as well. No doubt about it. What's the number one thing that's contributed to your success?
My willingness to be a beginner. I think that's the biggest green flag indicator of wealth is how comfortable are you by knowing nothing? The day that you are the expert and you're continuously the expert something and that's all you're talking about is you're on the pedestal, that's a scary position to be in. Like for me, I always love forcing myself to be a beginner in something and learn as much as I can, passionately curious. So that's the biggest thing is like every single person I meet, I'm trying to figure out what perspective do you have that I've never considered. Because my business is like, while I celebrate my business and I love my business, it's like I also realize there's so many blind spots that I have. And I try to zoom out as much as I can whenever I complain about managing 6 people. I think about that there's many, many thousands of people managing 600 people that are laughing at the notion. And so I don't take it personally. I think it's funny. So I'm continuously trying to put myself in bigger rooms, bigger environments. I call it pond hopping. As soon as you're the biggest fish in a small pond, you can't grow anymore. So the ponds that I swim in right now are, people that are $50, $100 million plus. Like that's why I moved to Austin, Texas. That's a lot of personal friends that I'm making. So the way that I think about things is kind of coded to how they view things. And so that helps me kind of like bypass levels of the game just by being in their orbit. And that's where all my perspectives come from. So I call it strong beliefs loosely held. I will change my opinion on things when presented with new information.
What's the room you're trying to get in right now?
I want to get into a back office room of a creative studio. That's what I want to get into. Nobody talks about it. There's no resources about it. But there are these guys like Patrick Bet-David, Gary Vaynerchuk, Cardone, Pineda that have these media teams, especially like Vaynerchuk and Patrick Bet-David. I see their media teams and their YouTube channels and there's an entire team that goes on behind that. I don't know anybody that's on YouTube that's listening, but it's way more difficult and expensive than you think it is. And if you realize how expensive and difficult it was, you'd have a higher appreciation for the videos that you watch. So like for me, I'm looking to hire a creative director and video editors. That's like $100,000 salaries for each of those positions. And it's insane. So I really want to get around people that are like in the back office of the media, seeing like, how do you run this? Like, what are the deliverables? What are the KPIs? What are the key hires? How do I build this org chart and this team out? How much does it cost and how much does it return? So I'm going over to Alex Hormozzi's HQ in Vegas. I'm going to ask his team. Like, I'm going to make a beeline for his head of media and ask them, because that's what my next move is.
Love that. Yeah, I love that. Even that, there's clarity, right? There, you know who you're looking for as well. That's incredible. All right,
Oh,
last question.
I even have his picture. I know exactly what he looks like. His name's Caleb. I'm coming for you, Caleb.
Love that. Brian, last question. How do you like to give back?
I like to give back with our education, first and foremost. Our business model is really wacky. We give everything away for free. Like, so that's our entire business model. As I say, we give away all the information for free and we sell the implementation. So if we have a really good call internally within our community, we'll just record it and just post it on the podcast. So it's just like, as a further, if we have keynote speakers that we fly out to our $1,000, like $4,000 event per person, we'll record those keynotes and post them publicly on YouTube and on the podcast. And so we just give everything away for free. All my private conversations, I normally am just like, can we just do a podcast instead so thousands of other people can benefit from this? And so that's the main way. Now moving forward, now it's through my team. I really like giving back to my team and contributing through my team. You know, we have one of our team members that's looking to adopt. I like to keep things close to home, so we're funding his adoption. You know, there's another one that is getting married. We're funding his wedding in the Philippines.
Wow.
So that's super cool, and like different things like that. That's really fun. And then, of course, we give a little bit, like 10% to charity, but that grows over time. So ask me again in about a year or two, and that's partially an excuse that I'm calling myself out on. I could do it today, but I want to have an entire fund and an entire like team and an org chart dedicated to a foundational level to where we can impact at scale, like from that. But right now it's through just helping as many people that are in these corporate jobs as possible, replace those with cash flow so that they could be the entrepreneurs that we need them to be.
Wow. Well, Brian, I've really enjoyed getting to know you. I'm encouraged by your story, and I'm encouraged by your level of clarity as well. I don't see that very often. We hear that often,
Thanks,
but
man.
most people do not pull the car over like you talked about to actually think about where they're going. And I think it's obvious in your level of success already that you've had some clarity, right? You've taken some very actionable steps that have been very personal to you, but on purpose, right? A very purposeful,
intentional.
That's right. Been very intentional. Even your 3 levels of cash flow. I love how you think about that, and even your willingness. So, and I think this is a big sticking point for a lot of people in the beginning is being willing to pay for mentors, right? And for me, I always talk about my first mentor was like $12,500, and my wife and I didn't know where we were going to come up with the money at first, at that time. Yep. And looking back though, I'm just like, oh boy, it was just a no brainer. Right. And now we pay so much more than that every year for lots of different types of mentors. Right. And I wouldn't have it any other way. Like I know the value, but you came right in and knew the value of that, willing to pay for mentors, and then the ability to partner, right, and building your network and through podcasting. I don't know too many other people crazy enough to do a daily podcast, so congratulations on that. As well.
Respect to you too.
Yeah. So grateful for that. But how can the listeners get in touch with you and learn more about the Academy and your book as well?
Yeah. So I wrote a book, From Passive to Passionate: How to Quit Your Job, Grow Your Wealth, Turn Your Passions into Profits. The first half is going through all the mental and emotional stuff, which is the actual roadblocks where you're going through, how to attract peers, partners, mentors, set your vision, set your destination, stuff like that, overcome limiting beliefs. And then the entire back half is pure freaking nuts and bolts strategy when it comes to business and real estate acquisition. Here's how seller financing works. Here's your OKRs. Here's your KPIs. Here's how to buy businesses. Here's how to buy multifamily. That's the back half. So you can find that on Amazon, From Passive to Passionate. Besides that, I say check out my podcast, Action Academy. If you're still here, you may be a bit insane listening to us after all this time. You should check out the show. You'll like it. We interview a lot of really, really smart people and wealthy people. I document all the ways that I'm messing up my business along our way. So you get benefits of both worlds. You get the average Joe and me, and you get the multi-millionaires, although I'm a millionaire myself, but you get the guys and girls worth 20 to 50 to 200 on the show. Check out Action Academy podcast. And lastly, the quote that I'll leave people with, which is my favorite quote, is vision without action is a daydream. Action without vision is a nightmare. Vision without action is a daydream, is you putting your stuff on a vision board and screaming affirmations in the mirror, acting like that's going to change your life. And you telling yourself how wealthy you are, but you're not doing anything about it. That's a daydream. But on the flip side, nobody talks about this. People that are just blindly acting. And I'm talking as much to the sophisticated investor as I am the rookie. There's many people that I know that are worth $20 million, $30 million that have no idea why they're doing it and what they're doing. And now all they've done is built themselves into a hole where they're saying, I'm doing this for my family. I'm doing this for my family. And now their kids are 13 years old and they've spent the last 13 years building this for their family, not spending time with their family. And now their kids don't want to hang out with them. So if I can get that message out and help people avoid that, that's a win.
No doubt about it. Brian, thank you so much.
Thank you so much for having me.